Hi, good morning. Thanks so much for joining in. You're watching Ask Profit. I'm Alex Matthew, and with me is Mahima Vachrajani, and we're here to take you through the next 1 hour of trade. That's right, in case you missed this yesterday, Ask Profit is now a 1 hour program. And that number that you see at the bottom of your screen, that's where you can send all of your questions to us. Let's take you through where the markets are right now. And it's a polar opposite from what you saw in trade yesterday, where you saw frenetic selling continue from the previous week, and a number of sessions in a row where you saw the Nifty 50 lose as much as 1,400 points, more than that in fact, and you're seeing a bounce back from the low point of the day today as well. And there are a couple of factors that are playing out globally, but we'll talk about that in just a bit. The benchmark index at within touching distance once again of 25,000, and the broader markets, if at all, are seeing even more buoyancy. So you have the mid-cap index that's 1.5% higher, you have the small-cap index that's up about that same mark, and the market breadth is tilted very firmly in favor of the advances. This is the exact opposite of what we saw in trade yesterday. Now, what are the factors that I mentioned? I will very quickly name them. One is global and the second is domestic. The global factor is that we were looking forward to China's resumption of trade. The equity markets there were shut and they are now open. They opened with strong gains. There was supposed to be a press conference by the top planning body in China. That took place. There was expected to be a large fiscal stimulus announced, but that did not take place. There was no big bang announcement, as a result of which you saw the Chinese equity markets come off the high point, and you saw the Hang Seng that actually dropped 10%. It's recovered somewhat from the low point of the day, but it's still losing ground. So the whole idea of emerging markets selling off and going into China, that those funds going into China, that narrative takes a bit of a hit as of now. The other big talking point, of course, is the result of the assembly election. You see the numbers on the top of your screen. Right now, in fact, we're talking about Haryana, where earlier on in the session, you had the BJP that was set to lose ground in Haryana. Now that picture has changed completely, and you have the BJP comfortably gaining a majority right now. There are a few stocks that you should watch out for, and for that, Mahima.
Right, Alex. So, as you rightly mentioned, with respect to China, metal stocks, of course, are the biggest pack in focus today, and they're down because China is one of the largest producers of metals, and stimulus in real estate sector bodes well for the metal sector. But seeing the kind of commentary coming on from the planning committee, the metal sector is seeing a tad bit of pressure. Currently, almost at its day's high right now, so it's off from its day's lows, the entire Nifty metal. But some more stocks in focus, which of course we'll discuss in detail, towards the end of the show. But to give a brief about that, Tata Power and JSW Energy in focus today. Nomura has come out with an interesting note on the power sector, and it's initiated coverage on Tata Power with a target price of 560, which poses a 27% upside potential. Today the stock is up around 4%, and JSW Energy with a target price of 885, which is 31% upside. Tata Motors, another stock in focus, where the Q2 sales numbers have come in, and wholesale has the wholesale numbers have been impacted by around 10%. Next one is CLSA on M&M. They've upgraded to outperform with a target price of 3,400, and the stock is reacting well to that, up around 3%. Lastly, Trent is also in focus. Interesting Kotak note on Trent, which says that Trent is set to launch, its foray into the lab-grown space, and set to launch the brand Pome in West Side stores, and this could potentially be, the Zudio of LGD or lab-grown diamonds market, is what Kotak is saying, Alex.
And that stock is buzzing in trade today. By the way, incidentally, Citi, if I'm not mistaken, had a note initiation of coverage, if I'm not mistaken, with a considerable upside. And we'll talk about some of those details. In fact, Mahima will talk to you about that in just a bit. For now, let's turn attention to the focus of the day, which is, or rather, the key focus of the day, as we normally do on Ask Profit, which is Skipper today. And there's a reason we're talking about this, because Nuvama has come out with a note. It has initiated coverage with a buy recommendation. The stock is up as much as 10%. To talk about what Nuvama is saying in its note, we're joined by Anushi. Anushi, what can you tell us?
Hey Alex, so we are seeing strong gains in Skipper Limited, and now this is on the back of the Nuvama note you've just mentioned. They've initiated a buy call with a price target of about 650, which implies a 44% of an upside from its yesterday's close. But just a little bit on Skipper Limited, this is a lead manufacturer for transmission and distribution structures, and it also undertakes EPC projects in the infrastructure segment. The company's market cap stood at about 5,300 crore. So what Nuvama has basically said in its note, they've seeing strong certain key highlights. Just to point it out, they are seeing a strong presence across the T&D ecosystem. And with this kind of a ecosystem it has built, it expects a strong performance overall. Even the high voltage macro tailwinds, that is both from coming in from the domestic and the international side, will be another factors that would lead to the company's growth as we go ahead. It's also doubling its tower capacity, which is in which it's the only backward integrated player in India and holds a niche position in the pole players. So that is another factor that we should be watching out for. However, on the key risk side, we also need to watch out for any kind of execution and order or related delays which could derail the company's performance. And also sharp price of raw materials could be another factor that one should be on a watch out for. So 44% of an upside that Nuvama is looking for Skipper Limited, and why the company's stock is up today.
Absolutely. Thanks so much for laying that out for us. In fact, provides a perfect footing for us to go to our experts. We've got Asta Jain, who's Senior Research Analyst, Hem Securities, and Swati Hodkar, AVP Technical Research at Nirmal Bang. Thanks so much, ladies, for taking the time, and good morning to you. Asta, I'll come to you first on your view on Skipper, if you have one. Would you recommend a buy even at this juncture with a 10% gain in today's session itself?
Hi, good morning to all of you. Talking about this counter, yes, Skipper India Limited, I think it is the world's largest and the only fully integrated T&D company, transmission and distribution space the company is into. So that is the major point. And what is the key highlight of this company is its order book. Order book stands at around 5,844 crore, which is almost twice of the FY24 revenue, I suppose. And in fact, the capex which they are doing, after that capex also the debt profile of the company stood in a will be in a comfortable position, because their debt to equity ratio stood at around 0.64x. So I think a healthy balance sheet with a strong capex plan, healthy order book, and the margins we are expecting to improve going forward. This company is well placed to cater the opportunities present in this sector. So yes, we are also positive on this counter. Now the main question arises whether to buy at this juncture. So our idea is that just let the stock cool down and then make an entry into the counter, because today it is risen up by almost 10%. So our idea here is buy it around the level of 475, 480. And then our price target for this counter is 525 to 530 at the initial levels.
All right, Asta, thank you so much for giving us those insights. In fact, so what her view is that you'd wait till the stock comes to 475 or 480 and then buy the stock. But let's move on with the queries on the show for today. The first query is from Balwant Modi, who's from Rajkot. And his query is that which semiconductor chip manufacturing is best for long-term investment? From what I understand is that TCS is one of the companies who is foraying into this, and plus some EMS companies who are also, coming into this. Asta, I'll come to you with this question.
So yes, right now some EMS companies are coming into this space. So in that we are really liking Dixon first of all. And for Dixon, the financial performance was also very strong in the quarter gone by. We are expecting this counter to continuously outperform the other peers, and hence in this space, positive on the Dixon Technologies. In fact, for the Keynes Technology also, although even I'm not very much sure whether they are into the space, but as an EMS player, we are really liking Keynes Technology also, apart from Dixon. So these two players are looking good to us. And especially for the Dixon Technology, we are giving buy recommendation on this counter. And our price target for the Dixon Technology at the current juncture is somewhere at around, because it is somewhere running at around 14,000. So we are expecting this counter to go till the level of 15,000 to 15,200 odd levels.
Considerable upside even from this point. The stock is up as much as 5% in trade today. Let's talk about the next counter, and this is from Vinod. By the way, sorry, before I forget, if you're writing to us for the first time, make sure that you tell us your name and where you're tuning in from, because when we take your question, you'll be able to identify that it is your question that we're taking. Vinod has got the next question, and he's asking about Jupiter Wagons. A lot of the rail counters were under pressure in trade yesterday. Let's see what it is right right now. It's up about 3%. He's bought at levels of 743 and he's looking to hold for a period of 6 months and he's wondering what to do. He's seeing a loss right now. Swati, what would you do on the charts?
Yeah, good morning, all of you. Alex, definitely this particular client has bought at a very high levels, and from the last 4 to 5 months session, we are continuously witnessing a profit booking. Now, whatever the rally we have seen from almost 300 to 700 levels, the stock has almost retraced 50% of that particular rally. We might witness some sort of a consolidation at the current levels. As of now, we have witnessed a price correction, but now the time correction will be come into the market. 440 is the immediate support level I'm looking forward. Up to that level, we might see some correction after, and from that level onwards, we will see some consolidation phase. Then turnaround will be there. So it will take much more time. As of now, I will not suggest to book the losses at the current levels, but definitely we should hold on because the stock is trading nearby its oversold zone. So we might witness some pullback rally from the down level towards at least 540 to 560 level. So it's a hold from my end. If possible, if any you're getting any dips towards to 450, 440 levels, you can average it out so that your buying price will come down and you can get a target of 450 to 460 levels on higher levels.
Got it. Swati, I'll stick with you for the next question. The next question is from Naresh, who's from Vijayawada. He's bought Bajaj Housing Finance at 168. And right now the stock...
Yeah, I don't know. I don't think that there'll be a view on the technicals. So let's take a fundamental view on that.
All right. So I'll come to you, Swati, for this then. Bajaj Housing Finance, he bought at 168. And right now, it's currently trading at around 149, which is below its listing price as well. So Astha, what should he do? Should he hold or sell?
So talking about this counter, because the issue price was 70 rupees when the issue came way back, not way back, in September only. So it was at the 70 rupees and the price to book multiple at that point of the time was around 3. So from that, we have seen a sharp rise and now it is quoting at around 150. So now the price to book multiple is going beyond 5x to 6x, which looks to be steeply priced at the current juncture. Although we know that the company has a strong asset quality, they have a strong brand name, but looking after a price to book multiple, I think now it is overpriced. So one really need to wait for some time, maybe 6 months down the line to get the profit into this counter because here the cost price is really high. So my idea here is to wait for a long term and then make profits into this counter because right now I think the pricing is a concern. So this is a good long-term story. In the short term, pricing can affect the stock price movement.
Yeah, considerable interest in the counter today. The stock is at upper circuit even as we speak. So no sellers in the stock, only buyers. Let's see how long that and how far that takes Bajaj Housing in trade today. The next counter is Reliance Industries. It's been under pressure over the last week or so. In fact, it has lost about 10% or thereabouts in October, if I'm not mistaken. Let's pull up the chart. Well, this week it has lost about 7% or 6.5% or thereabouts. And in fact, let's pull up the 1 month. Okay, so it's down about 5.4% or thereabouts. But still, Swati, under pressure. The question is from Jayesh. He's writing in from Mumbai. He's bought at levels of 3,050. So he's lost a bit of ground. What would you do with this? Would you buy more at this juncture? Is it a good opportunity to add?
Yes, Alex, this particular counter is really very strong, even though we have seen some correction. But after such kind of a rally, we cannot deny the correction at from the higher levels. Definitely, one should book their profits. But if we look towards the past history data, as of now, the stock is nearby its support level of 2,700 levels, which we have seen in the past history. I believe that 2,700 will act as a crucial support level. So as long as it hold that level, definitely one should hold the long positions for a longer term duration. I'm looking for a pullback rally or say the cover up rally up to 3,000 and beyond that level 3,200 can be seen. If you're getting any dips, definitely one should add on this particular counter. It's a quality counter one should have into their portfolio.
All right, so add-on deeps is the verdict. Well, the next query is from Nidhi Raghav. She's bought Suzlon at 74 and she's asking whether she should hold or sell. So Swati, I'll stick with you for this one. I think the highest so far for Suzlon has been 86 if I'm not wrong. What should Nidhi do?
Yes, definitely. We have seen a 52 weeks high at around 86 level, you have rightly pointed out. From there onwards, we are witnessing some sort of a profit booking because the stock was trading in the overbought zone. And even though if the market is has shown some sort of a very strong correction, but this particular counter manages to take a very good support nearby its cluster levels at 6500, 65 levels. And today we have seen a very good bounce back rally towards to 73. I believe as long as 66 levels are hold, we are definitely likely to witness this extension of this rally towards to 80 and 84 levels. So I will suggest hold this particular counter by maintaining a strict stop loss of a 65 rupees on a downside.
Okay, Vijendra also had a question on Suzlon. He's bought at levels of 76, if I'm not mistaken. Hopefully, this also covers that. KV Narayan Rao from Vishakhapatnam has got the next question. He's talking about Tata Elixir and the possibility of acquiring at the current market price, which is about 7,600. Asta, you didn't mention this particular counter, and while it's not necessarily a manufacturer of semiconductors, I believe that it's also involved in the design elements associated with the semiconductor space. It's, of course, doing a lot more than that as well. Would you suggest a fresh entry for a period of 3 years?
No, I would not, because the main reason behind it is that the Q1 FY25 performance was a muted set of a number. So, I mean, the numbers were not that great. And I really need to look after the results for the Q2 of FY25. So, we really want to wait till that time. So, my idea here is to wait just for the results to arrive and then make entry into the counter. Then it will be a lower risk, strategy. So here, my idea is just to wait for the results and then make a fresh entry, rather making at this point of time.
Right. Asta, I'll stick with you for the next question. The next question is on Sai Silks. Now, the question is that the person wants your fundamental view on yesterday's query. He's saying that yesterday he asked this query, that fundamental view on Sai Silks, because yesterday we saw the stock had a good run up, but today the stock has tanked quite a bit. So, your view on Sai Silks?
So Sai Silk was a latest entry into the secondary market because it was a IPO which came, I think, way back a year or so. So at that time, we were liking that company because the kind of establishment this company has made. As we all know that Kala Mandir, they are well known for their sari, and this company is they have a long history. And the kind of number of stores now they are opening is also looking good to us. But looking after the same store sales growth, I think we really need to wait for more, results and more numbers to come in on that part. And hence, my idea here is that fundamentally this company is looking good to us, but we really now want to see the results. And hence, we are recommending to not to buy at the current juncture. Maybe a hold is a better strategy, but fresh buying is not recommended at this point of time.
What about Tata Motors then, based on the fundamentals? It is down, if I'm not mistaken. Let's pull up the chart and see where it is. Last time I looked at it, was under a little bit of pressure. The latest developments from Jaguar Land Rover, they are putting on a brave face and talking about the wholesale numbers being positive and likely to improve in the second half because certain supply chain issues have gotten resolved. But the retail sales for Jaguar Land Rover are nothing to write home about. In fact, some pressure in China as well as in Europe. If I'm not mistaken, Europe sales down about 22%. China sales down about 17%. I'm trying to remember the numbers offhand. Hopefully, I'm right. Dr. P. Somaya from Hyderabad is asking about whether or not it can be bought Asta at the current level, 914. Is that something that you're advising?
So I think one can buy this at the current level also. However, the China is a relatively smaller market for this company, so we are not very much bothered about that part. And in fact, if I look after the margin and the debt profile, I mean that is looking good to us. In fact, there are new product launches which are really making us excited as well as and the inventory is also lower at current juncture. So looking after all these things, I think it is a good long-term story to put the money in. So at around 900 or 890 odd levels, one can really make an entry. So it's hardly 13, 14 points here and there. So my idea here is definitely one can make a fresh entry into this counter. But here the horizon should be long term, because in the short term, we can see some sort of hiccups in the price momentum. But in the long term, it will again move till the level of 1000 to 1020.
All right, so it's a long-term play, definitely then. The next question is from Praveen, who's from Coimbatore, Tamil Nadu. Now, his question is regarding IRFC, and he's asking whether one should hold or sell the particular stock. So, Swati, your view, how does IRFC look on charts? Because it's seen a significant dip since quite some time, along with the entire railway pack.
Yeah, IRFC as of now is currently trading in the oversold zone. And looking towards the chart structure, I believe that we have already seen a very sharp correction from almost 200 to 140 levels. And the chart suggests that it is showing us some sort of a positive divergence is happening at the current levels. So whatever the pullback comes, it might extend towards to 165 to 170 levels. So if you have any long position, definitely you can hold on. Downside, it has a very good support of a 138. So by maintaining that stop loss, you can definitely hold on your long positions for immediate target of initial will be a 164. Then after that, 175 levels can be seen.
Okay, fair point. All right, Peter has got this next question. He's asking about Moschip Technologies. He's currently eyeing, or rather, he's currently looking at a 17% loss. He bought at levels of 278 or thereabouts. Let's look at where the stock is currently trading. Moschip Technologies. Asta, he hasn't specified what his time frame is. I'm assuming that he's got a potential to hold for the long term. Would you suggest holding on?
So, Alex, I would be really sorry because I cannot counter this question. We are not covering this counter.
No, that's
So,
perfectly fine and it's understandable. The stock is up about 2% in trade today. It's up about 140% in the year so far. Swati, on the charts, how does it look?
See, Alex, on the chart, the stock is really not doing very well. This month, we have seen a correction of almost 6%. And from the last few months, we are witnessing a continuous low top, slow bottom formations on the low side. As of now, the stock has given the breakdown of 20 DMA, the short-term moving averages, and also the cluster supports of 230 levels. So all these patterns shows a little bit cautious sign at the current level. I will suggest if we are getting any dips towards to 245 to or 250 levels, so one should exit this particular counter because I am looking forward for a target of at least 200 to 195 levels on the downside. So on every raise, one should exit the long position from this particular stock.
Okay, the next question is from Harsh, who's from Bangalore. Now, his question is kind of unique. He's asking famous stocks with upside of 10% in the next 1 month. I believe that, festive season is kicking in, so a lot of festive stocks could see a lot, uptick in the next 2 months. But Swati, I'll stick with you for this one. What do you think? Next 1 month, what are the stocks that could see a 10% potential upside?
Yeah, the 10% potential upside, I can say one can quote for IT pack. IT pack is really doing very well. In this particular from the pack, Wipro really will do good in the not for the 1 month period as such, but definitely this is the counter one should go for a long. Currently trading at 520 odd levels. I believe if you are getting any dips towards to 500 and so one should definitely go for a long position. So I'm looking for a target of 580 to 600 levels on the higher side. So for a not for a 1 month, but for a definitely for a 1 to 2 months, you can go for a long position into this particular counter.
Okay, all right. We've got the next question from Balkrishnan. He's writing in from Ongole in Andhra Pradesh. He's bought NHPC at a price of 93 rupees and he's been holding for 10 months. He's asking, should he sell and shift from NHPC to a Suzlon? And can you give a suggestion on this? Since we've already taken a view on the technicals, I believe, on Suzlon, let's talk about the fundamentals. Asta, would such a shift make sense?
Suzlon is looking good to us. First of all, want to give price target of around 82 to 83 at the current juncture. So talking about Suzlon, what we are seeing is that there is a strong activity in their order bookings because the government tendering is going on. So that will really help the company. And this company, because we all know it is one of the leader in the wind turbine generators market. In fact, the renewable energy space is looking good to us. Company has an installed capacity of around 20 gigawatt and they are planning it to extend to 24 gigawatt by FY26. So I think industry tailwind is strong, companies expansion plans are strong and backing by the strong financial performance. So I think Suzlon is a better choice and one can shift towards this space also. Otherwise, both the counters are looking good to us. For Suzlon, our price target is 82 to 83 at the initial levels.
All right, so both the counters look good, but Suzlon is your preferred pick. As the next question is from Dr. Praveen Kumar Yata. Now he's from Mirzapur. He's asking as to what is the future of ethanol production in India and what about Renuka Sugar's growth. He wants a long-term perspective. He bought the shares at 52 rupees and he's asking whether he should hold or sell. So your fundamental view, because recently a lot has been happening in the sugar sector with respect to ethanol production. The government has also allowed ethanol production from B grade heavy molasses as well. So what do you think about Renuka Sugar and of course the ethanol production perspective?
So I think Renuka Sugar is not looking so strong to us. There are few reasons behind it. First of all, the results which came in Q1 of FY25 that were not encouraging, because we have seen if I extract other income and exceptional item, then there was a loss in the bottom line. So although ethanol production space is looking good to us, but if I talk about Sri Renuka Sugar in particular, this counter is still, we really want to see the results, as I'm saying for other counters as well, since the result season is about to kickstart. So here also, the past performance was not that encouraging, and hence we believe it's better to wait for some time, let the results come in, and then make entry into the counter. So we are giving here risk-averse strategy and just wait for some time before making entry into this counter, because the past financial performance was not that encouraging.
Now for the technical side of things, we're joined by Mr. Brijesh Singh, who's the Senior Technical Analyst at Opulent Investment Advisor. Welcome to the show, Brijesh. I'll start with the queries again. The queries from Arish, and he's asking about Titagarh Rail Systems, and he's looking for a fresh buy. He's asking whether he should wait or buy now. Your view on this, Brijesh?
So good morning everyone. Regarding with the Titagarh Wagon Railway has been considered on the daily time frame of the chart. The stock has been trading with lower tops and lower bottom formation. So number one sign of negativity. Second sign is that the stock, if we consider the moving average, the shorter term, the medium term and the longer term moving average, the stock has been trading below that. So again, it is a sign of a negativity. Even the strength of the counter has been weak. The oscillator fronts indicators are not giving any sign of bottoming out or positive divergence, nothing like that has been seen. So I would be saying avoid it. If anyhow stocks give closing above 11,150 above, then only the fresh entry buying would be seen in it, and that too also that would be the tool for the pullback, and that pullback can be towards the level of 1250, 1270. So I would be saying better to avoid. Look out some other counter for a buying has been considered.
Bounced back today, but it was under pressure yesterday, if I'm not mistaken. Brijesh, thanks so much for that view. And welcome to the show. Mazgon Dock Shipbuilders is the next counter that we're talking about. Ricky from Ludhiana has got this next question, and he's bought at slightly elevated levels, 4,613. A lot of people have made a lot of money on Mazgon Dock Shipbuilders. Unfortunately, Ricky is not one of them. Asa, on the fundamentals, would you hold on to this?
Yes, I would like to hold on this counter. The only problem with this, as I have discussed this prior also on your channel, is the valuation concern. Otherwise, margin profile is very strong and the deliveries are also very strong. But the kind of run-up which we have seen in the stock prices, that makes purely valuation expensive. So that is the major issue, that why we are not able to see any sort of upside momentum into this counter. But we are quite optimistic on the upcoming results, and maybe they will also settle the valuation concern. So a hold from my side. And price target which I would like to give to this counter is 4,800 at the initial level.
All right, so hold on the counter for now. As our next question, also I'll stick with you. We have Thomas George from Kochi, who's holding 100 shares of Trent, and he bought it for 2,400 a piece, and he wants to understand as to what to do with the share. And just for viewers' context, we are going to have an extensive chat in the second half of this show on Trent, so do stay tuned for that. But Asta, for now, your view on Trent?
So the results were above expectations, especially the kind of number of stores they have opened for West Side and the Zudio West Side, 228 stores. Zudio 500, more than 500 stores they have opened as of now. So I think that is really looking strong to us, because the value will also coming from those counters. In fact, there is a reduction in the losses in Star Bazaar. So that will also help the company posting strong numbers, although this company has posted good numbers in Q1 FY25, and we are expecting this to continue in the second quarter as well. So positive on this counter. Initial price target is 8,200.
Vodafone Idea, a viewer favorite, investor favorite. A lot of retail investors have piled into this stock and large amounts have been bought. It's currently trading at 9.35 rupees, once again in single digit territory. We've got Sandeep Yerova, who's bought 50,000 shares at a price of 9.72 and is looking to hold it for the next month or so. Brijesh, short time frame for a volatile stock. What is the advice that you would give?
See, overall, I would be saying only one word, Alex, better to be out of this counter. If you want to stick to the telecom, Bharti and Reliance would be the one. Regarding with this stock has been considered on the news space, we are seeing buying in it on a daily chart, weekly chart, and even on the hourly time frame of the chart. Nothing look promising right now where we can see, okay, we can see a pullback towards the level of 10.5 or 11 rupees. So overall strength is weak, better to book loss and be out from it. If you want to play in telecom, as I've said, Bharti and would be the favor.
Right. The next question is from Varun, who's from New Delhi. He has Mastic shares, and he has 2,000 of these shares, and he bought it at 3,000 a piece. Now, what he's saying is that his current investment is in losses, and he wants to know what he should do. Asta, from a maybe longer-term perspective and a fundamental view on this particular stock, in September, I believe we saw the small cap world selling a huge stake in Mastic, but Q1 was kind of muted for the company. But going forward, how do you expect the company to perform?
Yes, Q1 was muted because the margins were, there was a contraction in the margin. But going ahead, the deal momentum is strong in this counter. So that is looking good to us. And what we believe on the back of the strong deal momentum, the company will show strong or a decent financial performance in the coming quarter of second FY25. So I think right now, hold is a better strategy for this counter. So we are recommending hold on this counter. And if results come as per our expectation, then we can expect the price target to be somewhere at around 29.50.
Okay, Linde India share, let's pull that up and see where it's currently trading. And 7,915 is what I see, or thereabouts, is what I see on the screen. It's down about a 0.5% or thereabouts. And we've got a viewer, Sasideep, who has bought at levels of 7,795. So he's gaining ground and he's looking for any target that you might have, Brijesh, for a period of 3 months.
So first of all, I would be saying, Alex, to keep your buying price as your stop loss has been considered for a 3-month point of view. Then I'll say that the first level where the supplying can be seen would be 8,300 to 8,400 odd level. If we surpass this thing, then 8,800 would be coming in the play. So your buying level would be the stop loss and play for the target of 8,300, 400 followed by 8,700 to 800.
All right. The next question is from Rajesh, who's from Bangalore, and he's asking whether PC Jeweler at 150 rupees is a good gold stock to buy or not. PC Jeweler has been a momentum trade since the past 1 month now, and it has seen significant gains. Brijesh, I'll stick with you for this one. Is this the right time to enter PC Jewelers?
See, overall, the structure of the chart look promising right now. On the shorter term time frame as well as on the daily, the higher top higher bottom formation is been seen in the chart. 155 the stock has been trading. So ideal buying level would be if it trades somewhere around 135 around, then one can look out to buy with the stop loss of 120 and then play for the target of 165 to 170. So another 20 rupees of downside if it comes, your risk reward ratio would be in your favor.
All right, the next question is from Dr. Ramana. Now, his question is that please recommend 5 shares from short-term perspective. So, Brijesh, your top 5 picks which are looking extremely good on the charts?
So, I'll start with 2-3 picks only right now if someone wants to play. Then Tata Power looks good on the chart right now. With 454 around, it's been trading. We have seen stocks making a high of 296, and after that we have seen profit booking in it. It's been trading near the buying zone only. So one can look out to buy at the present rate of 454 with the stop loss of 445 or 440 and play for the target of 485. Another counter for the buying would be your Amber Enterprises. The overall structure of the chart on a shorter term time frame with higher top higher bottom formation is giving an indication of buying, and we can see stocks making a new 50-week high also. So 5,080 around it's been trading. So one can look out to buy at the present rate with a stop loss of 4,900 or 4,950 around is a support. So keep that thing as a stop loss. Play for the target of 5,500. And in metal counter, if someone wants to play, then one can look out for a pullback in sale. Sale has a range of downside at 125 or 122 around is a support on, whereas on the higher side it has a resistance at 145 to 148. So now it's been trading at 130. So present rate can be used for accumulation purpose with the stop loss of 122. Play for the target of 145, 148.
All right, so that's a comprehensive list. Even though I would suggest that perhaps, Brijesh, it's not the easiest to pick stocks right now. Would you actually say that patience is warranted? I'm just asking for your sense of how you've seen the markets over the last week or so. Of course, we're seeing a break in the selling right now, but would you suggest that patience is warranted at this point? Brijesh, I'm asking you.
Yeah. See, obviously, patience always rewards, but since the query was for regarding with the short term has been considered, I gave you some of the picks where the, one can look out for a pullback sort of thing where the profit can be made. And with the patient, I would be saying, have a discipline, have a stop loss. Even if you are looking for a technical perspective, fundamental perspective, or derivative perspective, people are what they have been doing, they are not using the stop losses. So I would be saying that whenever you've been trading, always use stop losses, and opportunity always would be coming if you have a patience in it.
And an important advice being given by Brijesh. Let's talk about Ujjivan Small Finance Bank, and this is a question from Natarajan Ramanathan. He's writing from Chennai, and he's deciding to buy fresh at this juncture, and he's looking at buying as many as 500 shares. He's looking at least holding for the next 12 months and buying more every month. Asta, is that a good strategy?
Right now, Ujjivan Small Finance Bank, I think buying at the current juncture is not recommended, because what we have seen in the quarter gone by, the results were not that encouraging. So in fact, we have seen some sort of fall in the last 1 month also. So my idea here is that wait for more fall to come. Although in the longer run, the kind of asset quality this bank is posting, I mean, that is looking decent. So there is no worries on the asset quality part. In fact, ROEs and ROAs are also looking decent in current juncture. The only thing which we are not very much optimistic on was the financial performance, which was muted. So I think wait for more dip and then make entry to this counter. So accumulation is a better strategy. Accumulating on the dips is a better strategy, I should say that.
All right, it's time, both of you, to go into the rapid fire segment. Asta as well as Brijesh. Brijesh, you'll be familiar with this. I won't hold you to it, but try to give your answers as quickly as possible in a period of 2 minutes. We're going to try and fit as many as possible. Sashi's got the first question. Bharat Electronics is the name of the counter he's bought at a price of 325. Would you suggest a hold at this point, Brijesh?
So lower tops and lower bottom formation has been seen. Better to exit. Still, if he wants to hold, then I would be saying keep a strict stop loss of 260 rupees.
Got it. Morpen Laboratories is the name of the counter. Sushila from Bellary is asking, bought at a price of 82, if I'm not mistaken, which is where the market price is right now. Asta, on the fundamentals, would you hold?
Yes, I would recommend hold on this counter with a price target of 87 to 88 at the current juncture.
Okay, CDSL is the name of the counter. Time period is about 2 to 3 years. This is a question from Rajan. He's bought at a price of 1,445. A little bit higher than the market price right now. Asta, he's lost a little bit of ground. Would you hold?
Yes, I would recommend hold, because the kind of accounts which are increasing and the capital market boom which we are seeing definitely will helping this company. Hold is recommended from the longer term perspective. Price target can be set at around 1400 to 1420 odd levels.
Okay, Z Entertainment bought at a price of 128. Nirmala from Bagalkot in Karnataka is asking about this. The stock is currently trading at that price. Asta, on the fundamentals, would you hold?
Yes, again hold for this counter as well. Price target can be set at around 135 to 138 at the initial levels.
Okay, the next one is on Raymond Limited. We've got a question coming in from Indra. Indra has bought at a price of 2,200. The stock is currently trading at 1,600 or thereabouts. Brijesh, any view on the technicals for a period of 1 year?
So shorter term as well as medium term look negative. Stock can move down towards the level of another 1,400 rupees. I would be suggesting better to book loss and be out from this counter. Anyhow, if stock doesn't give closing above 1,780, I feel that more pressure would be seen in this counter. So better to book loss and be out from this counter.
Fair point. All right. On that note, Brijesh as well as Asta, thank you so much for joining in. Very insightful session so far. Thank you so much for taking the time. On that note, it's time to move to the top stories at this hour. And we promised you that we will talk about a few things at the start. We are indeed going to be talking about the likes of Tata Motors as well as Trent. But first, there's an interesting story that has come through from New Delhi. The Enforcement Directorate has launched a PMLA probe into 20 companies that are importing Chinese goods. And there are quite a significant companies in this list. We've got Shrimi, who's hearing all of this from sources, and she's picked this up a short while back. Shrimi, thanks so much for joining us on this show. What can you tell us about this latest development?
So what we are picking up from our Enforcement Directorate sources is that 20 companies, including some big firms as well, who have been importing electronic goods, leather items, and in fact high-end furniture, they are under ED scrutiny. And what we have learned is that they are using the Hawala transaction, illegal way of sending money outside India, while importing the items, and they are under invoicing and saving taxes, and rest of the amount and the rest of the margin which they are making is sending back to the Chinese seller whom they are importing the item to India. So what ED is looking into two angles here. Clearly there is a money laundering to it, which they are of course looking at, and in fact their initial estimates of Enforcement Directorate suggested that there are around like 50,000 crore of money laundering is what they are keeping in mind and checking that. And in fact they are also looking at forex transaction, FEMA violation is also there, these companies are doing, and they are started the investigation, and of course we will see some sort of search action also on these companies in the coming days, and accordingly they will progress with the investigation. And we are tracking the story, and we'll get more on who all are under scanner. Back to you.
So much for getting us those details, Shrimi. Indeed, we will come back to you to get more details on this developing story. Let's talk about what we were initially discussing. Actually, no, if we can, let's go on to an NDTV exclusive. We've got Charu joining, and she's broke this story a short while back, where the Securities and Exchange Board of India has issued notices to over 120 stockbrokers for association with TradeTron. What is TradeTron and why is that a problem? The association, Charu is here to tell you what she's exclusively picked up. Charu, what's the story here?
Hi Alex. So Security and Exchange Board of India, which is the market regulator, last week had issued a notice to over 120, and to be precise 122 stockbrokers, including some top brokerages, for their association with an algorithm-based platform called TradeTron, which was basically an aggregator platform that gives you strategies and advises and assures certain kinds of returns by using these strategies. Now in a 2022 circular, the market regulator had already said that the stockbrokers cannot directly or indirectly be associated with any such platform, and on the violation of this particular 2022 circular, on the violation of the direction of not being associated in any capacity with such a platform, these brokers and brokerages have received this said notice, and now their responses and the further processes are remain to be seen.
Okay, that's a very interesting development, and of course certainly something else to keep an eye on in the coming days, and certainly over the course of the day as well. Now, we did promise you at the start that we would get you more details on Trent, which arguably is one of the stocks of the day. It is gaining quite significantly at very close to the high point, up as much as 5.5 6%. Now, one of the key developments is the foray into lab-grown diamonds. And my co-anchor is somebody that tracks the stock very closely. Mahima, the question, I guess, is why did they choose to go through Trent? And how big of a deal is this for Trent?
It's definitely a very big deal, Alex, because what they're trying to do is that they're not doing it through Titan, but doing it through Trent, because if they do it through Titan, their natural diamond sales will get affected. Right. But doing it through Trent will, of course, help them from a back-end perspective, because the manufacturing, the kind of labor work that they already have along with Tanishq, associated with Tanishq, that they'll be using, but they'll be selling this through the West Side stores. And the brand that they've disclosed for this lab-grown diamond is called POM, and they're expecting the rollout for POM to be in the next 1 to 2 years. Now what they're saying is that now there was a very interesting note, in fact, from Kotak on Titan, and what they're saying is that this development reinforces a caution stance on Titan, of course, because eventually it will affect the natural diamond sales that Tanishq already does, which is under Titan, and they're expecting direct indirect impact to weigh on the profitability as well as growth of Tanishq.
And correct me if I'm wrong, yesterday you had Titan under pressure because you had the Q2 business update where you have had a 26% growth in revenue, but it has been pointed out that gold prices have gone up, 30% in this year. So in value terms, while there could be a growth in revenue, in volume terms, it's a bit of a concern. So traditional jewelers are facing the brunt of things like lab-grown diamonds.
Absolutely, and one of the reasons why it was under pressure yesterday was also because the studded jewelry mix in terms of the jewelry was lower, and because of that, margins will take a hit in Q2. Once the numbers are out, we'll realize how much of a hit it is, but that is also one of the reasons. Now, just to give a view of how this lab-grown diamond will phase out for Trent, it is offering it'll be offering lab-grown at a significant lower prices, first of all, as compared to natural diamonds.
But 15% or 15 to 20% of the cost of the original diamond, right?
Correct. So it goes beyond that. It will be anywhere, the discounted price could be anywhere between 15 to almost 85% is what the note is saying. Yeah. And what they're saying is that 1 carat solitaire ring will be priced approximately at 24,000 to 29,000. And so Kotak believes that this POM particularly, could be the Zudio of the LGD market.
So whether or not this is good news for the investors of Trent, it certainly is good news for those people that are going to go and buy a diamond to propose, because a 1 carat solitaire ring would cost what, 2 lakhs? Thereabouts?
Maybe even lower, maybe 1,50,000 around that. And so why Trent in focus? Well, it's doing 3 major things, Alex, just to conclude this chat. Firstly, they're entering into premiumization side of things when it comes to clothing. Second is the lab-grown space that, now they're, foraying into. Thirdly, they're also, putting in a lot of R&D and a lot of investment into the makeup space, which they're selling under the brand of Studio West. And lastly, one more thing, the Star Bazaar, which even Astha pointed out, is picking up very well in the last 1 quarter.
By the way, I don't know if they checked right now, because I've got a message in my ear. Somebody suspiciously quickly has been able to tell me the price of a 1 carat diamond, which is around 3.5 lakhs. So I don't know if it's a sign of how quickly they've found out whether they're in the market or somebody has bought one for them in the recent past. That's a question for another day. Let's talk about Tata Power and JSW Energy, because these are 2 stocks that are in focus today. They're buzzing, they're gaining quite significantly, likely on the back of an initiation of coverage by Nomura. And we've got Puneet joining in to tell you about what exactly Nomura has been saying about these 2 companies. Puneet?
Well, thanks for that. So, it's a very positive report. They've initiated coverage on both these stocks. Let me just give you the target price. So, they have initiated, with a buy rating on Tata Power with a target price of 560 rupees per share. This is roughly a 27% upside from the previous close. And they also initiated a coverage with a buy on JSW Energy as well. Target price of roughly about 885 rupees per share, which is a roughly 31% upside from the potential previous close. Now, they said that, India's power demand has been growing significantly significantly led by the commercial as well as the residential sector, and they expect a healthy growth of about 5 to 6% CAGR over the next few years, especially in the next 5 years, and that will be led by renewable energy. So there's a target of roughly about 500 gigawatts of renewable energy capacity that's going to be built up over the next by 2030 specifically, and they see that these two companies will be a key beneficiary of the same. Now, both of these companies are adding huge capacity of renewable energy capacity going forward. For Tata Power specifically, they are expected to deliver an EBITDA CAGR of about 16% between the next 3 years, so between 24 and 27. They are also doubling their renewable energy capacity to 10 gigawatts in the same time frame, and are expected to deliver on these EPC projects as well. There should be a sharp jump, for Tata Power in terms of profitability, especially because the Odisha Discom problems have now been solved, and that's going to be one of the key triggers to watch out for Tata Power. For JSW, they're expecting a higher CAGR of EBITDA, 38% between FY24 and FY27. This is also because of doubling of the renewable energy capacity. They also see earnings visibility with roughly about 92% shares tied to long-term power purchase agreements. So that's one of the key things. So both these stocks in focus because of this brokerage note. Back to you.
I'm coming back to you, Puneet, on another brokerage note, and this is CLSA. It's an upgrade on Mahindra and Mahindra to an outperform from a buy. The stock is up 2% at 3,123, and the target price by CLSA has been kept at 3,400, which is considerable upside even from this point. And I'm curious about what you made of that note, Puneet, because they have comments to make both on the automotive business as well as the farm equipment sector. And if I'm not mistaken, they are projecting for an improvement in earnings.
Yes, definitely. And there is a new analyst that's coming on CLSA, and they were very positive on M&M. Now, target price has been increased from 2,600 earlier to 3,400, so a very big jump. And they mentioned that they are saying that there are three key things for M&M because of this big upgrade that they are seeing now. That's led by the improved scale as well as a superior mix of higher SUV products that the company is now selling, as well as better pricing compared to the previous few years. Now, they've also said that the upcoming EV models are going to be something to be watching out for. M&M is expecting to have 6 new EVs over the next 6 years, and that will increase the higher average selling prices as well, which will aid EBITDA as well as profitability. Now, for CLSA specifically, they are estimating a 9% EBIT margin guidance over the next 2 years, so roughly about FY26 to 27 is they're estimating this to come in. As you rightly said, the tractor segment is expected to have a higher growth in FY26 compared to the last 2 years. That's been flattish, so that's another thing. Finally, on what they make of numbers, they see a structural improvement in M&M's SUV market share. Currently, they are third overall in terms of market share, and they're implying a higher price to earnings of about 26 times versus 18 times that was between FY18 and 22. So definitely taking into consideration M&M's effort over the last 2 years and post the Anisha era, and that's reflective in this higher target price as well. Back to you.
All right, Puneet, thank you so much for breaking that down for us. But with that, we're completely out of time on this edition of Ask Profit. But stay tuned to NDTV Profit. There's more on the other side.